Good morning, ladies and gentlemen. Can you hear me, please? If you can hear me, please, can you show by raise of hands? All right, thank you. So this is our communication event for the Talking Agribusiness. For now, we are waiting for the other invited guests to join. So kindly be patient with us. Just give us 10 minutes and then we'll be with you. Thank you. Welcome everyone once again. Thank you for joining in. So for those of you who don't know me, my name is Portia Kofi and I'm with Sarah Development Organization, and I'm also part of the Talking Agribusiness team. We sincerely appreciate you for joining in. The theme of the webinar today is to create a platform for stakeholders to deliberate on the requirements for the competitiveness of agribusinesses in Liberia, regional trade integration of Liberia's agribusiness value chains, food systems, and the role of policies and different actors. It's also to serve as an enabling, participatory, and audience-focused forum for key conversations among vital stakeholders and wider audiences towards raising awareness of the opportunities for growing agribusiness in Liberia. We also seek to promote the visibility of the EU's development efforts towards the competitiveness and regional trade integration of agribusinesses in Liberia. So I'll be your moderator for today. And now, without further ado, let's start. So and now I'll ask one of our colleagues, Jacqueline Baidu, to share a word of prayer with all of us.
Hello. Good morning. So please, shall we pray? Almighty God, we thank you so much for such a wonderful morning as this. We pray that, oh God, start with us and end with us this program. We pray that through this program, you'll get insights that will aim to strengthen the competitiveness of West Africa, especially Liberia, enhance the country's integration into regional and international trading system. Thank you, God, for an answered prayer. Thank you, God, for all those who will be giving speech. We thank you. In Jesus' name we've prayed. Amen.
Hello, good morning. Yeah, thank you, Jackie, for that powerful prayer. Speaking to us today will be by way of a welcome address is Leroy Campbell from Liberia. He is our country director for Cassava Development Organization. But before I call on Leroy, first I want us to note that we're supposed to have the ministries of agriculture joining and also the National Fisheries and Aquaculture Authority joining, but they are not here yet with us. So we want to introduce ourselves. So we would like you to mention your name and then introduce yourself, your organization, and then we'll continue from there. So we have Abdullahi Massa. Hello, Abdullahi. Can you introduce yourself?
Okay, thank you. I'm Abdullah Masako, and I'm with Cassava Development Organization, fee office in Greenville, Liberia.
Okay, thank you, Abdullah. And we have Abel. Can you introduce yourself, Abel? Okay, I think probably Abel has a challenge with his internet, so we'll look at Leroy. Can you please introduce yourself? Hello, Leroy, can you hear me?
Yes. Good morning, everyone. My name is Leroy Kamo. I'm the country director for Liberia, TaAL Development Organization. Good to have all of you.
All right, thank you, Leroy. And I see we have Lucille Abrokwa. Can you please introduce yourself, Lucille? So we have Ramon from the EU delegation in Liberia. Hello, Ramon. Can you introduce yourself? Okay. Okay, so hello, Ramon. Can you hear me? Okay, so hello. All right, so I think we have Jerome. Hello. Hello, Jerome. Hello, Jerome. Can you hear me? It seems the internet is really not allowing Jerome to speak. Okay, so I'll move on to Matilda. I think I can see Matilda. All right, so there's a hand up. Hello?
Hello, Isa.
Hello?
Yeah, hello.
Yeah, this is Jerome.
Okay. All right, Jerome, can you introduce yourself and your institution or the name of your organization?
My name is Jerome Kanwe. I'm the agronomist for the EU Cassava Transformation Project being implemented by Syria Development Organization in the 5 southeastern counties. Yeah.
All right, thank you so much.
Good morning, this is Jeroen Witkamp. You just opened the option to unmute ourselves. Can you hear me now?
All right, thank you, Jeroen, for joining in. Okay. I think we have Lucille.
Hello. Hello. Yes. Sorry. Sorry to interrupt you. Sorry. Can you hear me? Can you hear me? Hello.
Hello, who is speaking?
Yes, I'm Ramon Vivanco from the EU delegation. I couldn't speak before because I didn't have the option, but now I think it seems that it has been set. So I'm program officer on private sector development at the delegation of the European Union. Thank you.
All right,
yes, I would like to take the floor
too.
too. This is Jeroen.
What the settings that didn't allow us to unmute ourselves. So I think for now everybody can unmute themselves. So please, when I mention your name, then kindly tell us your name and then the name of your organization. Thank you. Thank you to all those who have already introduced themselves. Now I think I have Lucille Abrokwa. All right, so I can see Isaac Donko. Isaac, can you mention your name and then your organization?
Good morning.
Good morning.
Can you hear
Isaac.
me, please? Yes, my name is Isaac Donko. Isaac Donko with CDO, that is CERAP Development Organization, and I'm the project manager implementing the Cassava Transformation Project here in Liberia. Thank you.
So thank you very much, Isaac. And I can see Gabriel. Gabriel, can you please mention your name and introduce yourself?
Hi, good morning, everyone. I hope you can hear me clearly enough.
Yes, please.
Right. My name is Gabriel Kofi Ayigulo. I am with the CERAP team and one of the individuals who worked on the National Agricultural and Rural Financing Framework. Thank you very much.
Hello, Kape, can you hear me?
Yes, I'm here.
Okay, please mention your name and your organization.
I'm Kape Satina. I'm from the Liberia Intellectual Property Office, and I'm the corporate service consultant.
All right, thank you so much for joining this morning. All right, I think I can see Nelson Kanmo. Nelson, thank you for joining. Can you introduce yourself?
Good morning.
Good morning.
I'm Nelson Kam, the country fee officer for the Cassava Transformation Project in Sign. Thank you.
Thank you so much. Thank you so much for joining. So I think I can see Michelle Mongain. Michelle, can you please mention your name and then let us know you?
Thank you very much. Good morning to all. I'm Michelle Mondengele. I'm the country representative for CAFOD, Sierra Leone and Liberia. And I'm really happy to join in today because we've just started some piece of work on cassava value chain. So when I saw this invitation, I thought it would be good for me to come and learn. Thank you.
Thank you so much for joining. Okay, I can see Francis Kwade. Francis Kwade, can you please introduce yourself and then let us know you? Hello, Francis, can you hear me? All right, so I think probably Francis is not able to speak for now. So I think I can see Gertrude. Can you please mention your name and let us know you, although we already know you? We can see Gertrude.
Yeah, good morning.
Yes.
You hear me?
Good morning.
So my name is Geertre Louagie. I'm indeed also with delegation of the EU to Liberia, together with my colleague Ramon, private sector expert, and Jeroen Wetkamp, who is our head of cooperation. So I am the program manager for agricultural development and food security. Over.
Thank you so much, Gertrude. We are honored to receive you. Thank you so much for joining. I hope I've not left anyone out. Okay, so I think I can see Ibrahima. Ibrahima, can you kindly unmute yourself and let's hear from you? Hello, Ibrahima.
Yes, good morning. I am Ibrahim Abba from the African Development Bank, a senior power engineer. Thank you.
All right, thank you. I can see, I think Amos just joined. Amos Balayan. Amos, can you please introduce yourself and your organization? Any other thing you want us to know
Yes, good
about
morning.
you?
This is Amos Balayan, and I'm from WFP Liberia.
All right, thank you, Amos. So I can see Aliu Dionge. Can you please introduce yourself and let's hear from you?
Good morning. This is Aliu Jong, WFP Liberia.
Thank you, Aliu. I think I can see Abraham DS. Abraham, can you please mention your name and let's hear from you?
Good morning. I'm Abraham DS Pano Jr. from Syria Development Organization, Sano County.
All right, thank you, Abraham. Thank you so much. Thank you, all of you, for joining. All right, so I think I can see Paula Naroki. Paula, can you please mention your name and introduce yourself to us?
Good morning. I'm Paula Naraki. I'm the country director for Mary's Meals Liberia. We do school feeding in 5 counties of Liberia. Thank you.
Thank you. Thank you so much, Madam, for joining. And we also have Professor Moses. Can you please tell us your name and your organization and anything we want to know about you? Hello? Okay, so there's a name here. I think Professor Moses is not able to speak now. So we'll move on to T. I can see T. T, can you please unmute yourself and tell us your name and your organization? Hello, T. Hello? All right, thank you. Thank you so much. I think T is not able to speak now. So I think at this point, we'll have to continue. We'll just, all right, so I think we have Namal Gwebzan. Namal, please, can you mention your name and then introduce yourself and tell us what you want us to know about you? Thank you.
Okay, thank you. My name is Namal Gwebzanga Christian Kafando. I'm the Welcome Program Officer at the ECOWAS Commission. Thank you.
Hello, thank you so much. Thank you so much. I hope we've exhausted everyone. So I think we are done now. So just as I said earlier on, speaking to us by way of a welcome address, welcoming all of us and defining the purpose of the webinar is Leroy N.S. Kanmo. So sorry, I think there's a hand up. I can see Jenkins Embassy. Jenkins Embassy, can you please unmute yourself and tell us your name and your organization?
Thank you. So my name is Jenkins Flower, and I'm the program officer for natural resource management, environment, climate here at the Embassy of Sweden. Thank you.
Thank you so much. I think we have Chele. Can you please, Chele B, can you please mention your name and your organization? You can see your hand up.
Good morning to all. My name is Chele B. Michel. I'm the project manager for the Liberian Fisheries, a new project on a Syria development organization based in Greenville, Sano County, Liberia.
Thank you so much. Thank you so much for joining. Okay, I think Professor Moses has his hand up. Hello, Professor, please, the floor is yours.
Yeah, good morning to everybody. I'm pleased to join you.
Good morning.
I'm from the College of Agriculture and Forestry, University of Liberia.
All right, thank you so much. So please be reminded that our brochure and the program outline has been uploaded onto the chat section. So kindly scroll up, you see the program outline and the project brochure over there. Please take time to look at it. Thank you. So please, in doing that, we'll want to just take some time to do this, about 10 minutes, while we wait for the Ministry of Agriculture and the National Fisheries and Aquaculture Authority to join us. So please don't go away. We'll be right back. Thank you.
Good morning, ladies and gentlemen. My name is Pa. I work with Sarah as well. I've just been notified that Mr. Nathaniel, who's from NARFF, has joined us, and we are still waiting for a colleague from the Ministry of Agriculture. But maybe in the interim, Mr. Nathaniel can introduce himself, then we can proceed with the program whilst waiting for the Ministry of Agriculture. Thank you.
Good morning, everyone. I'm Nathaniel Daly Soli from the National Fisheries and Aquaculture Authority. I serve as Associate Director for Policy Planning and Investment. I'm sorry for coming late. Hello, did you hear me?
Thank you so much. Yes, please. Thank you so much, Mr. Nathaniel. Okay, so we'll just start right on. My name is Portia. I introduced myself earlier on. So please, thanks for your patience. We are just starting right away. So speaking to us by way of a welcome address, we'll invite the country director for CASTRAP in Liberia. His name is Leroy N.S. Kanwo. Over to you, Leroy, please. The floor is yours.
Thank you very much, and good morning, everyone. And we apologize for starting late. Of course, we have to get other other colleagues to be able to join us. For those of us who don't know us, this is CASTRAP Development Organization. We are implementing the EU-funded Cassava Transformation Project, as well as the Talking Agribusiness in Liberia project. So these two projects are collaborating together with the Ministry of Agriculture to be able to host this event today. From our perspective, organizations and institutions, all of us are actors within the agriculture sector. There are a few things that have become much more clear to all of us, is that agricultural financing is one of the key driving forces towards agricultural development in Liberia. And from our understanding of how things is led, the content that we have developed and the knowledge that we've developed over the years, there are various instruments that are developed or that are currently being used in various forms and manner. But we thought under this project to be able to have a footprint that is very unique that everyone can be able to follow. And I mean, the Cassava Transformation Project, access to finance for smallholder farmers and agribusinesses, as well as the service providers, actually a key focus of that particular project, of this particular project, and that is the reason why we are here today. As part of the interactions that's going to happen today, we will have a presentation from the CASTRAP team regarding what we think can work for agricultural financing in Liberia from the research and development that happened from our side. Also, there will be another presentation focusing on Fisherfolk Access to Finance. So today it is purely access to finance as the major focus, and we can all utilize this information to be able to target the problems within the agriculture sector or the agribusiness sector of our country, of Liberia. And I look forward to all of us contributing our ideas from the experience we have, and then some of these inputs can be incorporated into the document we've developed, and then we can have a final version that we can all start to utilize after today. Thank you very much for joining, and please feel free to be able to put forth your comments, and let's be able to get the needed outcome from this interaction. Thank you very much and welcome.
Thank you very much, Leroy. So at this juncture, we want to know the representative of the European Union. Can we please have the representative of the European Union to speak with us?
Yes, good morning. Can you hear me? Hello?
Yes, good morning.
Yes.
Yes,
We
good
can
morning.
hear you now, Nick.
Yes, I'm Jeroen Witkamp. I'm the head of cooperation at the EU delegation. So good morning to all. So I don't know if you can switch on the option to use the camera, because it's a bit boring just looking at the screen like this. It seems you switched off on general level the option to switch on the camera. In any case, I will just do a quick introduction from the EU to not to take too much time, and you could finally get on with the meeting. So yeah, from the European Union, we have three priorities in Liberia. So managing natural resources, and the second one is jobs and growth, and the third one is financial and democratic governance. And I think what you are doing today is related with all these three priorities. We also work with our EU member states, and I'm happy that some of them are online today, and we call that the Team Europe initiatives, and one of our Team Europe initiatives is exactly on food systems, so that's also in line with what you were just going to discuss today. Also to mention that we have from the European Union a global strategy that's called the Global Gateway, and this is a strategy to promote public and private investments in countries through new and innovative financial instruments that I will come back a little later on that. And agriculture actually is one of the topics that we can cover. So now the European Union is for a long time we did development programs, but we were not that much focused on private sector investments and this world of private equity, but that is changing, and we are trying to look into that now with our development funding and grants, how we can address that, because we absolutely think that is necessary for economic and social development for countries. So, as is quite obvious. So I think also agriculture and rural financing are in line with that. So that's very good. Also to mention that what we are doing today is in line with the ARREST agenda and the work on a national agriculture development plan that is all ongoing. Okay, so from the European Union, what we would advise is that we promote dialogue, public and private dialogue. We think that is essential on any topic to get any further. So very glad that so many people joined today, and we think that there could be the discussions and recommendations can feed into any kind of strategy or framework or roadmap that could be developed on that. Yes, we have some experience in making available finance for agriculture and fisheries, for example, and then we know that without going into detail that yes, that it's not always easy. Commercial banks do not always have the knowledge and capacity to provide services, or the services are very expensive. or not adapted to the reality in the sector. So these are things that we can imagine can be discussed today. Then we have some microfinance experiences, and for example, in the fisheries sector, and that is absolutely necessary to strengthen that and move forward. Myself, I'm from the Netherlands, and we have a fishing sector that is that started off long ago like that, but then it became so maybe one day Liberia will be in that situation that the fishery sector becomes so strong that it needs to be limited, because that's what's happening in Europe. We have fishery sector that has so many capacity that they need to be limited by the European Union rules in order that they do not overfish. So that's another side of the coin, of course. Okay, so I'm going towards the end of my intervention. So just to mention again the Global Gateway and these instruments. We have colleagues online that can say more during the day. Yes, I'm wishing you very constructive and interesting conversations. Thank you. Back over to you.
Thank you.
Now you can see me, maybe. You can see me. Bye-bye. No, it's too late. Thank you. Bye-bye.
Yeah. Thank you, the European Union delegation in Liberia. So for now, we'll take a statement from the National Fisheries and Aquaculture Authority. So please, the representative from the National Fisheries and Aquaculture Authority, kindly, the floor is yours. And also, please be reminded that the camera access has been allowed. So if you want to use the camera, you can just allow it yourself. Thank you.
Thank you very much for the opportunity. Once again, I'm Nathaniel Daly Soli from the National Fisheries and Aquaculture Authority. I will speak in regards to the Fisherfolk Access to Fisheries Services in Liberia. I think it is a good thing because we have established the fisheries cooperatives across the 9 coastal counties, and there are needs for those fisheries cooperatives to be improved. We have issued then fisheries supplements, that is the fishing nets, the outboard engine, and we have groups then in those groups in regards to the various fishing learning sites. We also issued the life jackets for their safety. So issuing then or having the access to finance will be a good thing that will reduce the fishing efforts. If they have the other means of livelihoods, I think it can also improve their livelihood regarding some basic needs. And the fisheries sector will actually be to a point where we can have, because we want to introduce closed season and open season. We can only do that when our fisher folks have alternative means of getting revenues. So it is a good thing, and we look forward to it. We also look forward working with CASTRAP Development Organization to ensure that those things are met and the objectives of this program is met. So thank you very much. I will now turn it over to the next speaker.
Thank you very much, our representative from the National Fisheries and Aquaculture Authority. So do we have any representative from the Ministry of Agriculture?
So the Ministry of Agriculture, the Deputy Minister for Planning and Research, Honorable David Akwe, is expected to join soon. I think we can go ahead with the other activities. Why at some point we can take a break for him to be able to make a comment.
All right, thank you for that. So I think we'll leave that for now, and then we'll box on right into our presentation. First, we are taking our first presentation from Gabriel Aiglo. Is Gabriel around? Gabriel? Hello, Gabriel.
Hello, hello, hello. Good morning. Good morning once again. Good morning, everyone.
All right. Good morning, Gabriel. We are pleased to have you this morning. So your presentation is right on. Please, the floor is yours.
Oh, okay. Just a second, please, just to see if I can add a. Okay, hello. Is it possible to share it from my end?
Yes, please. We can see your presentation. Yeah.
No, I was hoping I could share it from my end. I could actually share the document from my.
Yeah, so actually you are sharing your screen, so we can see your screen now.
Okay. Okay.
Yeah, thank you.
Yeah, but then this is coming from your end, the document I shared with you yesterday. I was hoping I could share an updated version rather from my end.
Hello, Gabriel, I don't get you.
I'm saying that this is what you have. Is this coming from my end? Is this my screen?
Yes, it's coming from your end. Yes, please. That's your screen.
Okay. Thanks
That's
very
your
much.
screen.
Thanks very much. Very sorry about that. Okay.
That's okay.
Good morning. Good morning once again. Happy to be part of this. My name is Gabriel Kofi Ayigolo. I happen to be the team leader for the team that conducted the field work, the research work that looked into developing a national agriculture and rural financing framework for Liberia. Right. So if you can see my screen, I will just proceed to look at the outline of the presentation. I think I have just about 30 minutes to do this, so I will be skipping some of the slides that I feel may not be that, well, they are equally important, but we can equally skip them just to save time. So I'll be taking us through some introduction to the project or the program. We look at the key findings of the research work. Then, of course, we focus on the main output of the work, which is the proposed agricultural and rural financing framework for Liberia. Of course, it will be taken together with our recommendations and conclusions, so it will come as one package at that point. And then if there are any questions and answers, I think we'll be happy to have them and see how we can all, address them together. Right. So the assignment itself was designed to achieve these broad objectives. A look at agricultural financing and financial sector actors in Liberia, an assessment of the status of rural financing in Liberia. We also looked at the constraints and risks associated with financing faced by the financial sector, in providing credit to the agricultural sector. We had a look at some successful financing models across Africa and other parts of the world that can be replicated in Liberia if possible. We also looked at some policy interventions, and we tried to identify which policy actions, interventions, can be put in place to ensure we are able to achieve what we call an equitable, just, and inclusive agricultural financing in Liberia. Right, how did we go about it? We looked at it from 3 different angles. The first was a desktop review, what others may look at as a literature review, kind of examined existing documentation on agricultural financing at both national, that is Liberia, regional Africa, and of course, the global level. We also examined some case studies on successful models of agricultural financing across the globe, but with a focus on Africa. We were on the field to collect data, primary data, both from demand-side players, supply-side players, policymakers, and of course, other ecosystem operators. A very important aspect of the process was an engagement with the key stakeholders within the space. So there was a first stakeholder workshop that was taken as part of the data collection process, where we saw the views of key stakeholders, on the issues that we had at stake. The second stakeholders workshop was more of a validation process, where we provided the findings of our work and then got the input of the key stakeholders towards the final, compilation of the report. Now, just to see where exactly we are coming from, we were down on the field to collect data from the key actors, the focus of this whole research, the rural agricultural farmers, but it took us across the entire chain. So right from input dealers all the way to processors across selected counties. The county selection was done with the background that we considered the 9 livelihood zones of Liberia. We took 5 of those zones that sort of replicated the key issues across at least 12 counties. So we had Lofa, we had Bong, we had Grand Jide, Sino, and Nimba. The idea was that the characteristics, displayed by these 5, counties were representative enough of the wide issues across Liberia. So those were the key areas where data collection from the demand side was focused. Supply side, almost every player along the chain, right from the commercial banks all the way to mobile money service providers, were brought into the picture to identify their needs, their challenges, issues affecting them, and so on and so forth. And then we also looked at the policy and regulatory environment, Ministry of Finance and Post and Telecommunications, Ministry of Agri, Central Bank of Liberia. These are the key institutions that we believe have a say, tremendous say, in the provision of finance or ensuring access to finance to rural agriculture or the rural Liberia, and for that matter, agriculture in Liberia. And then, of course, some other ecosystem players, telecom, NGOs, and the rest of them. So we followed this line of activities from the desktop, primary data collection, then the first stakeholders workshop. After the first draft of the report, we came to the stakeholders, second stakeholders workshop, and then the final report presented. Now, I'll spend a bit of time trying just to highlight on our key findings. Just to share with you, actually those of us who were not part of the previous meetings, actually the second stakeholders meetings, and those who might not have had the opportunity to look at the final report yet. Now, I'll be skipping a few things here, but I just want to draw attention to the fact that we spent some time to look at the policy environment. This we found very important because you cannot just come in and want to recommend a way of, or an action, an activity without knowing what is already on the ground. So we took time to examine the policy environment critically, looking at it from 3 different angles: the cross-cutting policies, which we can see the very apex policy document, which is the Liberia National Vision, which trickles down through the Pro Agenda Prosperity for Prosperity and Development. That is a 5-year medium-term development plan. And then, of course, the telecom and the SME policy. Most of these policy initiatives have already expired, but they were very important to us because they give us a lot of insight as to what is already prevailing on the ground. It was critical for us to look at policies around the agri sector, and the critical one that came out clearly was the Liberian Agricultural Sector Investment Plan, LASIP2, which came out clearly as a very solid, policy document, and you wish it was fully implemented before its expiry in 2022. Then, of course, we're talking about finance. So the financial sector policies came in strongly, and again, the National Financial Inclusion Strategy 2020-2024 became the core document that we had to look at. And that also is another, fantastic document that you wish had also been fully implemented. Right. So it gives us a structure like this. So you can see the policy and environment starting from the top, where we have the National Vision 2030. That is a broad, the development agenda that captures the broad development agenda of the nation. Then, of course, the Pro agenda, which is a follow-up to the agenda for transformation. It's a 5-year development plan that also, unfortunately, would have ended in 2023. Then below that, you have the sector, policies, the MSME policy, the ICT policy, then the LASIP2 for Agri, and then, of course, the Financial Inclusion Strategy 2024. So looking at it, the ICT policy ends this year. Financial Inclusion Strategy ends this year. The others have already had their time. The reason we look at this, you can see from the last drop there, and all of these policies somehow have something for finance, something for financing MSMEs, ICT policy looking at developing ICT infrastructure, providing the structures for e-commerce, and of course, digital finance. The most interesting one is the LASIP2, which goes all the way to provide recommendations for infrastructure, systems, models for agriculture financing. Then, of course, the Financial Inclusion Strategy that looks at access to financial services and credit, digital finance, and then, of course, consumer protection for consumer protection and financial capability. Now, here I will skip most of this just to save the time. But for the National Financial Inclusion Framework, I would just want us to have a look at the key pillars on which it is built. We have three main pillars. The first one, access to financial services and credit. Second one, digital financial services. Then the third, consumer protection and financial capacity. When you go into the details of all these, key pillars, you are convinced that, look, the structure is there for funding, finance to be channeled all the way down to the bottom of the pyramid. In the Liberian Information and Communication Policy, very ambitious policy that looks to support economic development generally through a fully integrated information communication technology system. Now, the importance of this is the infrastructure needed for digital finance. Digital finance, which we will see very shortly, coming in very clearly as the one important tool that will address the challenge of access, especially when road infrastructure is such a challenge to us at the moment. So the key target here is on digital financial services, and that policy has a very ambitious statement there to draft a national policy on interoperability of telecom networks for digital financial services. LASIP is the most interesting one. And again, I will go straight to the key important elements that are of importance to agriculture and rural financing. Outcome 2.5 looks at inclusive and innovative agro financing being promoted. It breaks it down into the core objectives, activities to facilitate access to credit for actors along the agricultural value chain. Very important. The next one, to promote adapted community-level credit schemes for actors along the agri value chain. Now, when we ran into this initially, we're like, so what are we here for? What is our work then? Because you get the feeling that, look, whatever you are likely to come up with had already been captured in some of these documents. So we'll skip through quickly. And lastly, captures most of the recommendations we have put out there, and we'll be coming to that shortly, including the design and execution of the Liberia incentive-based risk-sharing lending system or mechanism. And of course, this one here, advocating for the reactivation of the Agricultural Cooperatives and Development Bank. That's a bigger one. Right, so strengthening existing community-based financing schemes for smallholders, provide supporting services such as business training for actors in the chain, and then promoting and supporting innovating financing schemes such as warehouse receipt systems that comes with the warrantage and so on and so forth. Now, looking at what I have just rushed through, unfortunately, you come to the point where you want to ask the question, if we should not be looking at some form of policy harmonization at this stage, where you have different policy documents from different sectors touching on the need to provide access to finance, especially to the bottom of the pyramid, to MSMEs, to Agri, and so on and so forth. So we have the National Liberia Vision translating into Vision 2030, coming down to the PAPD, and then we have the policies, ICT policy, LASIP 2, then the National Financial Inclusion Strategy. All of them have something that connects somehow to agriculture and rural financing, but they are disjointed, and that is the question we try to address as we move towards our framework. We also took some time to look at the regulatory environment. The policy environment is one. Now we're looking at the regulation, and again, we realize that yes, it is quite solid. The Central Bank Act, Financial Institutions Act of 1999, but the key one, that's the most current, that is driving the regulatory environment of Liberia for now, is the Central Bank of Liberia Act of 2020. Now, that act, the amended version of 2020, gives the CBL a huge room, increased autonomy and operational independence, but it also expands its mandate to cover almost every aspect of finance, including even insurance. So that's a lot of work really for the central bank. But of course, at the same time, it puts all of this under one umbrella. So there is that advantage of it is easier to coordinate activities and get things done instead of having them scattered. But there is also that real push from different angles for insurance, for example, to be regulated by a different, body. Right. So in terms of regulation, we've noted that the CBL has done the whole lot, has some form of regulatory instrument for almost every sector, from microfinance to credit unions, rural community finance institutions, mobile money regulations, and also agent banking. So the regulations are there. The regulations are there. And we also have other instruments like the Liberia Commercial Code. We have the Liberia Collateral Registry, which makes it easier for people to use their assets to secure loans. Then, of course, the Land Rights Law of 2018, which also now makes it easier for people who were previously excluded to be able to, own land and be able to use such, assets to secure funding. So these are all some of the things that we feel are in place already, and the only challenge now we have is their implementation. Now, we also look at the financial ecosystem, and this is the structure we have. So we have it from, as at the time we completed this study, and of course it's already a year old, 9 commercial banks, rural community financial institutions, microfinance institutions, credit unions, VSLAs, mobile money operators, and then insurance companies. So these are the institutions contributing towards financing, providing finance access to Liberia, and for that matter, our smallholder rural farmers. As to what extent this is being done is a different story. To what extent are Liberian banks, commercial banks, able to provide funding to the rural farmer? What about the rural community and financial institutions, microfinance, and so on and so forth? That is the issue at stake. Now, going further, we try to look at the locations, how the distribution of the financial institutions look like. As at the time of completing the study 2022, it appeared that only 9 out of the 15 counties had a commercial bank branch. You have places like Lofa, Bapolu, Granjide had EcoBank, and I think they left somewhere along the line. Riversea, Grand Cru, still, as at that time, did not have a bank branch. Then we also looked at mobile telecom services. We had 10 counties where in which Lone Star Cell was represented, and then Orange was in 6. Mobile money service, 5 counties for Lone Star, and then Orange had 9. So we can see somewhere here, Bapolu mobile money service as at the time was not present. We have Riversea, we we had Grand Cru, we had Maryland. It's been a whole year. These things change very quickly, and it is our prayer expectation that perhaps by now, some of them may have already gotten access. Right, so I'll skip the bank branches, MFI branches. I'll skip this quickly. Rural and community financial institutions. So in the main, we could see that on the ground, it is the microfinance institutions, including the rural, commercial, and community finance institutions who are really on the ground. The commercial banks are not that fully represented. The bulk of the commercial bank branches are found within the Monserrado, area. Then you have the next largest around Magibi, and then of course Grand-Bassam, which are all down south towards the capital. Right. Okay, then we have the credit union cooperatives, and we'll move on from there. So now we just want to put this whole thing into context, and we are looking, the focus of the study was actually on the rural and low income agriculture actor, the farmer, aggregator, the small scale, the processor, small scale. Those are the ones we are looking at. So the literature may have things like agriculture finance that covers almost all of this. So all income levels, urban, rural. You may have rural finance that focuses solely on the rural and low income earner. Then we have the microfinance that covers both urban, rural, and the low income. Somehow you find all three of these have been a role to play when it comes to what we call the rural and the low income, consisting of agricultural enterprises, non-agricultural enterprises, and then households. So in a way, we are not just looking at agriculture only. Once you bring in rural finance, invariably, we are also looking at other enterprises that may not necessarily be agri-related, but are also within the rural communities. For most micro and small businesses, sometimes it becomes difficult to separate the business incomes from personal activities. So you have household incomes, household expenditure, all these things come in, mixed up together. So we are taking it together. That is the reason we expanded it beyond just agri finance to now include rural finance as well, such that it covers all rural, dwellers, all Liberians living within the rural communities, rural counties, and how they are able to access finance. So we also looked at where some of these funding is coming from for now. Agriculture funding for now is mostly from the international donor communities, hitting close to 80–90% thereabout. The government of Liberia, then of course the private sector through some of the commercial banks. These are the main sources at the moment, but predominantly coming from the donor communities. We took a bit of time to also look at the constraints to rural and agricultural financing. What are the challenges? We took it from 4 main angles. We looked at the demand side constraints, supply side, the policy, regulatory environment, then of course, issues relating to infrastructure. In a way, all four are somehow, intertwined in a way in that they kind of relate with each other or one another. So what did we find from the demand side? Now, for the demand side, we are looking at factors like location, socioeconomic status, and activities of the rural communities. Now, these are mostly small-scale agriculture sector operators, and we looked at factors that make it difficult for them to access credit from the formal financial sector. And these factors are known to many of us already. The poverty rate, remoteness, poor infrastructure. Yes, there's an issue there, low and declining rural population. A few years back, the population in the rural areas was more than the urban. Now there's a shift. It has turned the other way. There's an rural-urban drift that is making it a bit difficult for some of the financial institutions to want to go in there because they are not getting the threshold of the customer base that will make their activities profitable. Low literacy rates, and of course, limited financial education. Those are the key things we found as a challenge. Now, these put together kind of brand the rural MSME, the rural communities as risky, costly, and also unprofitable for the formal sector finance providers. And so they don't find it attractive, and they don't want to go in there. The supply side, and again, we are looking at factors internal to the commercial banks, and of course, the other mainstream financial institutions. And these are factors that make it either difficult or impossible for them to extend credit facilities to the rural communities in general, and of course, the agriculture sector in particular. Reputational risk came up strongly, coming from the behavior of the banks, their staff, and the rest over time. There were issues like customers having to queue, and sometimes you travel over a long distance to the bank to withdraw, and you are told there's no cash. In other words, the communities have lost confidence in the banks. You apply for facility, you never get it, and all these issues have led to the banks not or let me just say the communities don't really see the banks as that credible, if I can just use that in quotes. Of course, they have limited, expensive, and inflexible products, but the products are not really suited to the needs of the farmers. And of course, they complain of high non-performing loan rates and high operating costs. So these are some of the things. And of course, I may add that some are not really that well capitalized. They are not well capitalized. They don't really have the resources to lend, especially for large-scale agricultural activities. For the policy and environment, we are looking at factors outside the control of both the rural communities, the farmers, the agricultural operators, and of course, the suppliers, that is the financial institutions. These are policy issues, and they don't have any control over them, but they do impact the bank's ability to lend, and of course, the farmers or the operators' ability to access credit. And these are weak policy implementation. The policies are there, and we saw it earlier on policy disharmony as an issue. Then we also have weak law enforcement. Now, weak law enforcement, just to cite one example where banks complain about loan defaults, and you take the issue to court, and nothing really is done about it. The defaulting customer walks around free, and you never get your money back. So these are some of the challenges that are coming from the policy and regulatory environment. Then briefly, we can also touch on infrastructure issues. The road network is one. So banks complain about this a lot. So you have a branch in a community where you have difficulty transporting cash, to and from the community, your head office, or wherever. Poor electricity coverage, weak telecommunication network, and of course, limited intra-sectorial linkages that between the various sectors, the various ministries, and so on and so forth. So these are also critical issues, especially the road network, electricity, and the rest of them. Right. Now, we proceeded to look at existing financing models in Liberia. And we found that, look, the CBL has done a whole lot over the last decade or so, especially pursuing measures that deepen financial inclusion, especially across rural Liberia. The National Strategy for Financial Inclusion is one key document, and that has really helped, a lot in this regard. Now, the National Strategy for Financial Inclusion is not specifically directed at Agri, but financial inclusion is financial inclusion, and it's always targeted at those excluded. And our small-scale Agri sector happens to be one of the most excluded, and this can only be good news for them. Right. What are the key things we found? You have the rural community finance institutions, which we saw earlier, microfinance institutions, credit unions and agricultural cooperatives, VSLAs, the agent banking model, mobile money operations. Read the literature, go everywhere. These are the key things, the key models you are pointed to. And these are all already being modeled, being operated in Liberia, especially the rural community finance institutions. The only thing is, do we need more? How do we create more so that we can deepen, financial inclusion? Microfinance institutions, do we have more? Are they well capitalized? Those are questions we want to look at further. We also saw the CBL has run a number of directed lending programs where they provide funding to intermediaries such as the commercial banks, rural and community financial institutions, and the rest to on-lend to their clients, at reduced or subsidized rates. Government grants, different projects have come that provided grants, NGO activities, and of course, the value chain financing models, outgrower schemes are also out there. So we do have all of this in Liberia already, and the question is all about how do we strengthen them, how do we make them work better. We conducted a bit of analysis looking at the strengths, the weaknesses, opportunities, and threats, relating to agricultural financing models currently prevailing in Liberia. When you look at the strengths, we saw them. There's a diversity from commercial banks all the way to mobile money, VSLAs. So the diversity is key. And then these are all tried and tested models, tried, tested in other countries, and we see that as a strength. Of course, there is a weakness in that you take the banks and some of the what we describe here as an uneven and skewed branch distribution towards the urban centers. Most of them are not really well capitalized. Staff not adequately skilled or trained, and of course they lack the capacity to develop products that really meet the needs of the rural and communities, and in particular agricultural or operators. Are there opportunities? Yes. Opportunities are there for the private sector, especially commercial banks, to come in. We see a robust regulatory environment. We see continuous international development partner support. We see a large and growing market, and we don't see that much competition. So that if some of the issues we saw earlier on infrastructure and the rest are just dealt with in a way, then of course the private sector should be able to move in quickly and address some of these issues. Of course, the bank complained about some threats, factors that can potentially, affect their work, and for which reason some of them will want to sit a bit, wait and watch, the potential for civil conflict or threats of political instability, which is a common thing across Africa. Weak law enforcement, which we have already touched on, poor infrastructure, threats of pandemics, and of course, the very, challenges we all know associated with the rural agriculture sector. Small-scale activities, seasonal, risky, and all of that. Then, of course, we have the low literacy rates. Now, given that we have a lot of some of the models that are out there in Liberia already, we only try to now look at those that are not here yet. So you have models like the warehouse receipt system or receipt financing. We also looked at the agriculture insurance pool. We also looked at the agricultural incentive-based risk-sharing system. And the truth is that all of these have already been captured in LASIP 2 from the Ministry of Agriculture. They are all there already. So the only thing left will be their implementation. So we move forward. We move forward looking at what our observations are and some of the things that we feel we can put across for us all to think about, to think through and see if there are things we can possibly pick up with the policy makers, policy implementers to see if they can be brought down to the ground. Now, the focus of the study was to look at what is described here as equitable, just, and inclusive agriculture financing. So for this, we relied heavily on our stakeholders through the stakeholder engagement to see if we can have a general understanding of what we all mean by this term. And this is what our stakeholders came up with, that it should be one that positively targets rural areas, women, and vulnerable groups. That is to be equitable, just, and inclusive. The financing scheme must demonstrate fairness and equal access to all. And it should be one that specifically addresses the needs of the vulnerable, youth-led agribusinesses, and place gender balance at the heart of its activities. But these are not, we are not able to do this for now because of some, barriers, challenges that are persisting. And what are the challenges? What are the barriers? Physical access, collateral requirements, excessive paperwork and documentation, requirements for loan guarantees. Others have issues like gender or age-based loan ceilings. You are 18, you are 20, so you can only take so much. And then, of course, other forms of gender, age, and disability-related discrimination. So that if we are to have an equitable, just, and inclusive agricultural financing, then we want to look at how we address the physical access barrier, address barriers relating to collateral requirements, address barriers relating to paperwork and excessive documentation, address barriers relating to asking a poor farmer to
Hello, Gabriel, are you there? Okay, seems there's a problem with his internet. Please be patient. In the meantime, please note that the slides will be shared on the CERAF page after the program has ended. And also the link will be shared with participants after the program. Thank you all for staying tuned. Hello, Isaac, do we have you now? Hello, Gabriel, sorry, do we have you now? Okay, I think Gabriel has dropped off. Okay, please hold on while the CASTRAP team trying to connect him again. Hello, so the team has tried reaching Isaac. His internet just dropped, so he'll reconnect in a moment. So please be patient. So Gabriel tried to join. So I beg your pardon, Gabriel. It will join very soon. Thank you.
Hello. Hello.
Hello, Gabriel, we can hear you. Yes, we can hear you. Please
Yes.
proceed.
Very, very sorry about that. I think my internet just dropped for no reason. Right. So I'll just continue from where I don't know exactly where you lost me though. I think I was touching on the equitable, just and inclusive agriculture financing, and I was looking at the need for us to remove the barriers, to accessing finance. So I'll proceed from there. Some of the key things we identified as a way to address this. The key one is for the banks to look at relationship lending, as a key activity, deal with the clients directly, get to know them, especially that Greek sector, the crop level, product level, value chain level, and know their peculiarities and be able to design products that meet their needs. Such relationship, will reduce some of those challenges they have at the moment, and then make them more comfortable and be able to ensure that they are able to provide funding, credit, and borrowers also are able to pay as and when they have to. Digital financial services is key. That also comes in strongly. They have to build their network and then make sure they are able to use some of the mobile money penetration, strategies to address some of the.
Hello, Gabriel. Please, we are not seeing your screen. Hello, we are not able to see your presentation. Hello, Gabriel. Hello, Gabriel. I think Gabriel is having a challenge with his internet. Hello, Gabriel.
He's online.
Hello, Gabriel.
Yeah, hello.
Yes, please, we are not able to see your screen.
Okay, can you see it now? The internet dropped again, but can you see it now?
No, please.
You still can't see it?
No, please, we are not able to see your screen. I think you have to try and share it.
Let me see. Okay. Is it there now?
No, please, I think you should.
Is it there now? Can you see it now?
Okay, so it's back. Yes, please. It's fine now.
It's back. Okay.
Thank you.
Right. Very sorry. I think my internet is just misbehaving today of all days. Right.
So
very sorry about that. So one other measure is the credit guarantee scheme.
Hello, Gabriel.
Hello.
Yes, please. You have 5 minutes to wrap up. Thank you.
Okay. All right. Right. So I will skip most of this now because of time constraints and go down to look at the framework itself. Now, so the framework itself, we looking at a private sector driven structure that works through existing channels that we have already identified. It will be agriculture, rural agri focused, and then we have institutional support coming from the CBL, the MOA, and other sectors. It is a two-tiered structure. The tier one looks at enhancing the capacity of existing institutions and channels to enable them, increase finance access to the rural and smallholder, agriculture sector. And we believe that this should lead to increased lending capacity of those institutions, lower risk, increased access, then lower cost. Now, so we looking at the existing channels, the VSLAs, CUCs, RFI, and all the way up to the commercial banks. And for each of them, we have capacity building, linkages to different, for the VSLAs in particular, we have capacity building, linkage to formal financial service providers, and the rest. So for each of them, we have what should be done to increase or improve their capacity for each of them. Right, and then the form of support that should come. So we have training, for example, directed learning. So you can see, for example, directed learning flowing through all of them. for the likes of the VSLAs, RF, RCFIs, capacity building, both technical and management is key. And we believe that these existing institutions should be strengthened, their capacity should be built. Those that need some form of capitalization should also be provided with such support, so they will be in a position to provide the needed support to the agriculture sector. Now, we actually proposed the formation of a directed lending fund. The CBL has, tried this, on a number of occasions. They've run it, but this have come mostly at project levels. So the funding ends, and then there were challenges with some of them, where you have the financial institutions not being able to pay back the funds that were disbursed to them. The financial institutions also complained that, well, the borrowers did not pay back, and so on and so forth. But we believe that lessons learned from such interventions can be, put together to rebuild what we call a fund. We are yet to agree as to whether this should be an agency set up on its own, or it can be, run as a unit or a department under the CBL. Now, how does it look like? The funding will come from the government of Liberia, international development partners, the donor agencies, international NGOs, and other sources. So this comes into a pool. So coming from a blend of sources, we expect that the cost will be much low, very, very low, because some will come in the form of grants, some in the form of loans, and so on and so forth. Then the directed lending fund will provide the funding to the distribution channels, which are the existing financial institutions that we've already identified. They will then lend to the rural agriculture sector and other identifiable sectors. They manage it, they pay back, then they also will in turn pay the direct. So it will become more like a revolving fund. And this is more sustainable than having it on a project by project basis. Now, the tier 2 is where we bring in the more innovative schemes that look at de-risking agricultural financing, and then, of course, stimulating increased lending to the agriculture sector. And here we are recommending the establishment of these 4 institutions, which are all already captured in LASIP 2. The Liberia Agriculture Insurance Pool, the Liberia Incentive-Based Risk Sharing System, the warehouse receipt system that will go with the commodities exchange, and then, of course, the directed lending fund, which we have already touched on. So again, this is what it looks like. The main required support will be the legal framework for each of them, institutional setup, technical support, and so on and so forth. Each of them obviously have their pros and cons. Countries, Uganda, Kenya, Ghana, have experimented with some of these with different levels of success. Lessons from such interventions in other countries will be brought into it to ensure that, look, whatever is set up here is made to work. Now, this is the framework itself that brings all of it together. So we have here to the far right, the support systems. So we take it from here, we have the BDS support, or the Business Development Services support that can be channeled through the APES bodies, financial institutions, international NGOs, and the rest. We have risk mitigation support, CBL, Liberia Insurance Association, insurance companies, financial institutions are playing a major role there. We have technical support coming from the CBL, APES bodies, mobile network operators, international development organizations, and the rest of them. These support will now be channeled through to the various players along the line. Now, when we take, for example, business development support, and then you see it coming all the way You see it coming all the way through to the VSLAs and also to the players, the agriculture and rural MSMEs. Their capacity needs to be strengthened. Financial literacy training, business management training, these are all critical. That will help improve their capacity to be able to use the loan facilities and then repay, appropriately. Then we have the technical support also coming all the way to, the key channels, that's the financial institutions. Okay, so we have all of these, the risk mitigation, interventions from the warehouse receipts financing. We have the Agri insurance pool. We have the Agri incentive-based risk sharing system, then the direct lending. So the direct lending, we see this arrow here coming from the direct lending fund to the financial institutions. The financial institutions can then lend it to the VSLAs, to the rural and the agriculture SMEs. Directed lending can also come directly to the VSLA. The VSLA then lends to its members. Financial institutions can at the same time lend directly to the agricultural and rural and agriculture MSMEs who meet their requirements, who may not need the to go to the VSLAs. So the VSLAs would support mostly the very small scale, poor, low income earners. So the VSLA will play that major intermediary role there in the very rural communities. It is expected that the repayments from the rural communities, farmers, MSMEs will go back to the institutions from which the loan came, either through the VSLA and back to them. And as they are paying back, the channels, the institutions are also taking payment back to the directed lending institutions or fund. Now, the warehouse receipt system is available to everybody. The value chain financing, outgrowers, contract farmers, they can access it. Individual farmers who are producing at a scale that can also meet the threshold here can also access it. Agricultural insurance pool lenders can access it. And then, of course, farmers who have what it takes operating at a certain scale can equally do so. Otherwise, the channels, that is the financial institutions, they can take the insurance to mitigate their risk. They can equally come through the risk, the incentive-based risk sharing scheme, where the central bank and government will be sharing a chunk of the risk with them. So in a nutshell, this captures what we want to put across. It is not anything new. It is all situated within what has already been provided within LASIP 2 and what is envisaged within the National Financial Inclusion Strategy. It is just put together here to show a certain clarity to how it should be implemented, such that the rural and agriculture MSMEs, especially the very poor, will not be left out in the scheme of things. So I will end it here. I think my time is up. And I want to thank you very much for your time, and my sincerest apologies for the break in my internet connection. Thanks very much. And if there are any questions, I'll be very happy to address them, please.
Thank you very much, Isaac. Sorry, I beg your pardon. Thank you very much, Gabriel Ayiglo. That was very detailed and insightful. But we'll make time for questions, but that will be after Isaac Donko's presentation. So next on our agenda, we'll have Isaac Donko. Isaac is the project manager for the Cassava Transformation Project. So after Isaac's presentation, we'll take time, some few minutes to address questions. Please note down your questions. Thank you. Isaac, over to you, sir.
Portia, if you could allow me to share my screen, I'll be grateful.
So, Gabriel, thank you very much. Please remove your screen kindly so that Isaac can share his screen. Thank you. So, Isaac, I think you can share your screen now.
Still the same. And it says only organizers allow that. So if you can enable me, please. Thank you.
Okay. So
can you see my screen now?
I think it's loading. It's loading. So please, you have only 20 minutes because of the time. So please summarize it in 20 minutes for us. Thank you.
Right. Thank you very much. Good morning, everyone. And I apologize. I think I was also getting on and off the platform because of internet connectivity here. But I hope that it stays on for at least the next 20 or so minutes so that I could finish with the presentation. My name is Isaac Donko, and I'm the project manager for the. Can you hear me?
Yeah, Isaac, we can hear you clearly, but we cannot see your screen. So please check and share. Yes, I think it's now. Thank you.
Okay. Can I see the screen now?
Yes, please. Kindly go ahead.
All right. Good morning once again. So I'll just give a brief background of the project, the Cassava Transformation Project. Unfortunately, this is not a platform to really go into details about what we're doing because of, the time constraint also. So just to say that the Cassava Transformation Project is one of the 16 national projects currently being implemented across the 16 ECOWAS countries, and we have one regional project also. All these projects are being funded by the European Union, and it's implemented under the auspices of African Competitiveness Programme, or WACOM. So in Liberia, the Cassava Transformation Project is a national component of WACOM. And again, as it reflects the rest of the projects across the sub-region, the objective of this project is to enhance the competitiveness and regional integration of the value chains into the regional market, and again also into the international market. So basically, this makes the Cassava Transformation Project quite unique in the sense that, unlike a lot of projects in Liberia, this is more tilted or primarily tilted towards trade facilitation, unlike food security projects that abound in the country. There are 4 implementing partners of the project, led by CASTRAP, a development organization, as you can see on the screen. The project is implemented east of Liberia in the 5 counties you see on the screen: Sino County, Grand Cru, Grand Jide, and River G. I'll go straight into the objectives, the specific objectives of the project. So objective 1, just as a preamble, this project is implemented using the value chain approach. So you will notice that we are working across all the different segments of the cassava value chain. So you will see that our objectives also reflect, the different actors along the value chain and how we support these actors and the functions that they do.
So Isaac, please, your screen is static. The presentation is not moving, so we are not able to follow what you are presenting. So if you could kindly check, because your screen is just being the cover page since you started. It's not changed. It's still static.
I'm sorry.
Thank you.
Is it better now?
It's still the same. Actually, yeah, it's still static. The cover page for your presentation is still what we have there. There's nothing moving.
Let me try again.
So if you can just take it off and just reconnect it on the screen again, it works.
All right. All right. Better now?
It's trying to load. So let's maybe just give ourselves a second or two. It's trying to load. You can see it's trying to load, but it's not. The screen is not there yet. Okay, at this point in time, we can see the implementing partners. Can you try? Just move a slide and let's see if it's working. Then you can.
All right. So objective 1.
Isaac, just to interrupt you, we are still on the implementing partner slide. We cannot see, it's just still static. So that's what I'm saying. Try to move one slide. It was able to move and we see the change on the laptop. Then
Yes.
I think it's good to go, but it's still the same.
I did, and then now I'm on this one. Can you see this one now?
What we see here is implementing partners, nothing beyond that. It's still static here.
Exactly. Check again, and then I will restart. Okay. Let's can you see objective 1?
It's not yet there. We see that the transition state, but it's still not yet there. You can't see this slide show up.
Oh, my 20 minutes is not running out. Fortunately, I'm surprised it's not working.
Just give one more try. If it doesn't work out, then I would have to get MK to step in with a presentation. Then when you resolve your technical challenges, we can take it up from there because the meeting closes at exactly 12:15 without any further extension. Thank you.
That's fine. That's fine. So I'll try again.
If not,
can you see objective 1 now?
No, not yet.
Not yet. That's fine. I'll try and see if I can resolve this. All right.
Okay. So apologies, ladies. At this point in time, I think be mindful of the technical challenges our colleague Isaac is facing. We'll call on our colleague Mamichi Rapobe, who's also the technical lead for the Talking Agribusiness Liberia project, to make a presentation that has to do with access to finance for fisher folks in Liberia. She will step in because I think it's quite impromptu for her, but we'll ask her to just take a minute to upload her presentation, and then we take it from there. Thank you.
Hello, thank you very much, Pa. Good morning, everyone, and thank you very much for this opportunity. Okay, so I'm here to upload my okay. Okay.
Yes, so I think it's sharing. Maybe you want to put your presentation in a full screen mode so that we can see, because currently it's not quite legible considering reading from a laptop. Thank you very much.
Okay, I believe it's working now. So my presentation is going to look at the context of the research and how.
MP, sorry, please put your presentation in a full screen mode. Please put in a full screen mode, because we can still see your index on the left, and the presentation for those who are looking at presentation of small laptops, it will be difficult if you can put on a full screen mode. Thank you.
Okay. Working on that. Is it on a slide now, please?
Okay, I think mindful of the paucity of time, maybe you'll just proceed, but you have to increase your font size a little bit, because I can still see the pages there in more like the table of content of the presentation. I can still see it on the left, but anyway, I think you can still proceed mindful of the little time we have now. Thanks.
Okay. So with the content, the context of this research, as Isaac was saying earlier, this is also funded by the European Union under the WACOM, and the expected outcomes of this project, which is the Talking Agribusiness in Liberia project, is the dissemination of information and awareness raising about opportunities for business performance and growth, and the regional trade integration of Liberia's agri-food business value chain, and also an improved environment for those businesses to thrive in accordance with the objective of the WACOM. Now, for this project, what's happening is that we are conducting research on 6 selected and validated agribusiness topics, and then we organize events based on the research conducted, where we engage stakeholders like we are doing today on interactions and to interact on the research findings. Earlier, we've had discussions on the status of youth engagement in agribusiness in Liberia. We've looked at Liberia's positioning in the African continental free trade area. And we are here today to look at Fisherfolk Access to Financial Services. With this, we look at the demand side of the value chain financing space. And this is one of the areas that Gabriel spoke about, one of the 4 areas that he spoke about. But for this, we are focusing entirely on the demand side. So even though access to finance is very important for the development of MSMEs, in Liberia, as far as agro MSMEs are concerned, because there is no framework guiding financial institutions on the development of sector-suitable or sector-specific services, even though we have projects aiding actors' access to finance, including the Ministry of Agriculture's RETRAP, SAPI, there's also the USAID's Business Incubator, several projects happening to ensure that agri-food business value chain actors have access to finance. But without a framework that puts it all into perspective, the sustainability and scale of such access is at stake. Now, when we look at CBL's documentation, we realize that for the financial year 2022 and the financial year 2023, the agricultural sector accounted for only 3% of the loans and advances that are made into the Liberian economy. Now, finance to access to finance remains a challenge for agro MSMEs, as we know. And in our first research activity, we realized that it's actually the most constraining factor in the emergence and growth of youth-led agro MSMEs in Liberia. And CASTRAP's work that being done on the National Agricultural Rural Financing Framework, we believe is an opportunity to ensure that the fishery sector, which is an essential part of Liberia's agricultural and livelihoods framework, is accounted for. After all, we are looking for an inclusive, equitable, and just framework so that their needs and interests are also covered. The fishery sector is a very important aspect of the Liberian economy, supporting a great deal of people who are fishermen and fish processors and traders and many other artisanal workers that we may not be able to account for. But 9 of the 15 counties in Liberia are situated along Liberia's 579-kilometer coastline, which is considered among the world's most productive fishing grounds, right? And we know that historically, Liberia's fishery sector was once the highest value exporter of fish products in Africa. So the potential for the sector to birth and grow MSMEs is significant, and we must be able to nurture this. So this research was conducted to complement the CASTRAP team's work as presented by Gabriel, and to enrich the discussions that we have around a proposed agricultural and rural financing framework. Now, the goal of the research was to understand the factors influencing artisanal marine fisherfolk's access to financial services in Liberia, and specifically, we wanted to identify the different fishery value chain actors' financial needs, financing needs, and then also look at their accessibility and usage of available financial services. We also wanted to look at the constraints they encounter in assessing these services, and highlighted the gendered experiences of their financial need, their access, and choice of financial services. For this particular presentation, although every one of these objectives are touched on, they don't go into much details. Now, for the methodology, if we do have any questions coming up later on, we could discuss them. But essentially, we looked at, we conducted the research through a mixed methodology approach, and we sampled our respondents from the 9, based on the 3 different coastal regions. We selected 2 counties, one from the first coastal region 1, and then the second from coastal region 2, which was the north and the south. And the sampling was based on geographical and socioeconomic conditions of the region. And we looked at 4 fishing communities where this research was conducted. The 2 counties, Montserrado County and Sino County. In the research was conducted in July 2023. So we interviewed 200, pardon me, we interviewed 278 fisherfolk, women, both women and men. And then we also interviewed an officer of the sector that is responsible for the fisheries segment in Liberia's economy. That is the national NARFF. Okay, so I want to try as much as possible for us to run through this quickly. So we looked at the 4 communities where this research was in the 4 communities where this research was conducted. These are Crew Town, West Point in Montserrado, with Morovia actually, then Fanti Town, West Point, also in Morovia, and then Greenville Downtown Beach in Sino County, Greenville, and then Greenville Fish Town Beach, also Sino County, Greenville. Now you can see that it was geared more towards the urban side of it, and this is because these are places where we're more likely to find financial institutions where the fisherfolk would have to access. Now we see that the gender dimension was such that we interviewed more males than females, and then also 1/3 of our respondents came from Sino, and 2/3 from Montserrado County because of the population dynamics. Now, in terms of age and gender distribution of our respondents, over more than half of that's 54% of our respondents were aged between 36 years old and 53 years old. And the youth section, those aged 18 to 35, represented 40% of our respondents. Now, the males were more in the age segments, except for the 36 to 53 years old, where the females were higher by 2 percentage points. So we understand that educational attainment is relevant for financial literacy, which also informs our decisions in the access of financial services. So we looked at this, and our findings indicate that more than half of the respondents had no formal education at all, while about 1/4 had attained primary school level education, and about maybe 1/5 had achieved secondary school education. Generally, fishing communities are characterized by low levels of education, so it is noteworthy that 2% of the fisherfolk respondents had received tertiary education. And interestingly, every one of them was located in Sino County, with 3 of them falling within the youth category. Okay, so this looks so much. What we tried to do when we looked at the average income of fisherfolk, because we understand from literature that usually it is the incomes and low income areas that have please excuse me, have low financial inclusion. Now, it was difficult to actually get exact incomes. One, on the other side, people are not, respondents are not willing to share with you, or because of the irregularity of their incomes, they are not quite sure what they should share with you, among other things. But we worked with estimates and we're able to look at average points. Now, we found that averagely, respondents conducted 22 business operations. That is, either they are at one point going to the sea in case of fishermen, or in case of fish processors processing a batch. That's what business operations here in. And in the bumper season, an average of 22 operations were conducted by the fisherfolk, and in the lean season, 16 operations. Now, the estimated average income end per operation was 43,735 Liberty, or the Liberian dollar, which is a little bit above $200 US during the bumper season. And in the lean season, which is they call the fisherfolk call that the bad season, and the bumper season the good season, because in the bumper season you have more catch, and in the lean season you have lesser. However, because in the lean season you have lesser, it means that demand, the market rules run, and then the cost runs higher, so they are able to make more money. This does not necessarily mean that more business operations lead to huge incomes. And another thing we observed, for example, many in terms of fishermen, fishermen might be able to, they may work alone, but when it comes to fancy fishermen, sometimes they work in what they call companies, in groups. So such an income will not be for one person. It means that it has to be shared amongst the members of the company. Now, seasonality of the sector has significant effects on fishermen incomes, as we have established. And then on the gender dimension, we also observed that men earned more per operation during the bumper season, while women earned less. However, in the lean harvest season, a woman's average income that's earned per operation was 60 times more than a man's. And I believe that's because they are involved, the women are involved mostly in the post-harvest sector, where they add value to the fish. And what happens is that in the lean season, where the market works in the favor, demand is high, and therefore prices are higher. If a woman has, for example, storage facility, freezer, and also is able to process more, then they are likely to make more money from the venture. In spite of this, looking at the scatter plot of the respondents' income, that is, we put everyone's income in a graph, what we found out was that in the bumper season, most respondents earned between 20,000 Liberian dollar and about 5 million. Yet, if you look closely, Fisherfolk incomes in Sino County, particularly incomes of the women, fell way below 500,000 Liberian dollar, which is within the lesser part of the income range. So although it might look like women's average incomes may be higher than that of men, many individual women earn very low incomes. And most respondents whose incomes fell within the higher parts of the income range were men, with women falling within the lower income ranges. Now, in the lean season, most respondents generally earn between 10,000 Liberian dollars and about 2 million. We interviewed several fisherfolk, like I said, but within the value chain, there are different things that different people do. And so we try to find out what the main activity or occupation of each respondent was. And we realized that 53% of our respondents were fishers and or fishermen. And in accordance with what we see, the gendered disaggregation of labor, the gendered labor dimension in marine fisheries all around the world mostly, we realized that 95% of these fishers were men. Now, 42% were fish processors, and then majority of them were women. Now, we had input dealers, 1% representing input dealers, and this was equal parts men and women. And then we also had women constituting 4% who were involved in trading and retail of fresh fish purchased from the shore. Now, an important thing for access to formal finance is formality, right? So we looked to find out if these fisherfolk had registered their businesses or enterprises, whatever they were doing. And we realized that nearly half identified their enterprises as legally registered entities. And this was high because the fishermen included their registration, the registration of their fishing vessels under NARFF. So once their vessel was registered, which is required of every fishing vessel, they considered their businesses as formal. But looking closely at it, because of that, we realized that over 70% of the men we interviewed said their businesses were registered, while only 17% of the women indicated that their businesses were registered. Now, further breakdown where we look at whether somebody is registered as a business, with the appropriate quotas, or simply registered a registration of financing vessel, will probably tell a different story, where we will see that less of them would have registered their businesses. Now, we also considered other sources of income, and we found that for 85% of the respondents, fisheries was their main work, and there was no other source of income generation. And for the 15% who had other sources, it was mostly in retail, services, agriculture, construction, and transportation, in that order. Okay, so now with the objective one, where we were looking at fisherfolk financing needs, we wanted to find out what their most pressing financial needs were, and we found that when it came to personal financing needs, and that's something that Isaac also, Gabriel also spoke about, how because of low income activities and everything, how household incomes and enterprise incomes can just come up together. Now, pressing personal finance, when we look at pressing personal financing needs, mostly short-term needs, like the payments of school fees, rent, and household needs are, please excuse me, were what the majority of the respondents considered as pressing, right? And we realized that the women were more likely to consider short-term needs more pressing than any long-term needs. But then if we look closely, we realize that we also find out that the urgency of both short and long-term financial needs are comparable when we look at the business value, the business value chain that's on my rights. Okay, on our rights. That's when you look at the most pressing business financial needs. In the business sector, the most pressing is considered long-term, while in the personal, short-term is what is most pressing. However, like I've established before, the agency of both short-term and long-term when it comes to business financial needs is comparable. I mean, we see 46.7% and 54.7%. So it means that on both ends, it's very important. And women were more likely to indicate short-term needs as the most pressing for business financing. And this is because they dominate the post-harvest value aspects of the work, where more cash flow is required for the work comparative to the male side. Now, we wanted to find out what financial service, formal financial service, they considered critical, a critical need. And as consistent with literature, credit access and savings were considered vital financial services to meet their pressing personal and business needs. But the credit or loans recorded the highest frequency of mention as respondents considered these as critical financial services that both men and women needed. Savings were also mentioned, as we can see, 38%. And the findings on insurance, where it just says that 14% frequency of mention is consistent with an earlier study that reports that Liberians do not view insurance as a crucial financial service. But then there's also the 6% that thought, well, I don't need any formal financial service. One of the things that we found out was that the respondents associated their critical financial service needs with their personal and business their financial needs in a way where credit and loans where the need for credit or the need for loans was highly linked with the expansion and scaling of business activities, as you can see in the graph there. And this is also consistent with an FAO documentation that reports that the most cited needs of agricultural households are cash assistance, and also their needs align with their production difficulties. So this is consistent with existing data. Then the reasons associated with savings as a critical finance service need included that it granted the convenience of securing excess money for later use, whether you save it on your own or you save it in an institution where, based on your savings, you are able to access loans later on. It is also important for accumulating money to reinvest into the business activities and then keeping track of your money and expenses. So the point which is really clear here that we're trying to emphasize is that in as much as fisherfolk consider their personal needs, the need for credit and loans is strongly associated with the expansion and scaling of their business activities. Now, based on the fact that credit was considered very critical, as we saw, we further examined the size of loans that, everybody's saying we need loans. So what kind of loan do you need? That's something that we examined. And we found that the majority, which is a little over 50% of the respondents, required loan sizes between 16,000 Liberian dollars and 80,000 Liberian dollars to meet their financial needs. Now, about a quarter required or desired loans higher than 80,000 Liberian dollars, while about a fifth noted their required desired loan sizes as lesser than 16,000 Liberian dollars. Now, the women fisherfolk were more likely to require or desire smaller size loans than were the men. And the men constituted the higher proportions of fisherfolk who required the biggest and the medium size loans. Now, this difference, which has also been recorded in literature, both in the context of low income earners and also even, I think Forbes recorded something similar in the American context when it came to MSMEs. The difference in women's and men's fisherfolk financing requests is a demonstration of the significant disadvantage that women fisherfolk have in growing competitive businesses. Some of the literature indicates that it has something to do with women learning less because they earn less incomes. They can only aim to get smaller amounts of loans than men. And then there's also a side of the literature that talks about the confidence in terms of the fact that many women do not get the loans anyway. And so when they are going for the loans, they prefer to cite an amount that they think they would possibly get. But based on the financing request, we've come to the conclusion that fisherfolk credit needs were actually micro loans. They are not looking at very big amounts generally. So now we looked at the second objective, which was accessibility of financial services. The first bit was we looked at availability of financial institutions and services in fisherfolk communities. This is something that Gabriel spoke about a lot in terms of the challenges with this. And we realized that about a quarter of the respondents indicated that there were financial institutions in their communities. And while over 40% of the respondents said no financial institutions existed in their communities, yet about a third were unaware of any financial institutions or agents in their communities. And if you look at the table that is there, you realize that unsurprisingly, more financial institutions were available to the respondents from Montserrado County, Monrovia particularly, than those from Sino County because of the very urban dimension of Monrovia. And in view of the challenges of the financial institutions that Gabriel has already spoken about, including road network, etc. Now, ownership of an account or being in a cooperative or sort of loan scheme or association is an easy way to assess finance. But we realize here from our findings that only 1/3 of our respondents owned a bank account or belonged to a SUSU or VSLA group or both. So in essence, a number of fisherfolk that we interviewed do not have any entry into assessing finance. And when we look at bank accounts specifically, so formal bank accounts, only 10% of our respondents had bank accounts, and the men were more likely to have those accounts than the women. When we asked if any of them had assessed financial services within the 6 months of the, or even a year, 6 months to a year of the study, we found that 73% of the respondents had never assessed any financial products or services at all. Not within the period they had just not, so the question had to change, while the remaining fraction had assessed this. Now, based on the fact that they had limited access to formal finance, we sought to find out how their businesses were financed. And we realized that personal capital, personal savings and capital, and also taking money from relatives and spouses were really the means by which people were able to access financing for their businesses. But self-financing was more dominant. So in our findings, we realized that the fisherfolk had a high propensity to save. They have good saving habits. However, where the savings were being held, I believe were the challenges, where a majority of them, like over half of our respondents, were saving their incomes at home. And while 16% of them saved using alternative methods like mobile money and what they call trusted individuals. Even with the mobile money, we also we found out the challenges where particularly they talked about during December, where you may have been saving, but then there wouldn't be cash in the system, and so you would just have money on mobile money, but not actual cash to use. So that is discouraging, but people still do save on the mobile money. Now, the third, we looked at key constraints to fisherfolk access to formal financial services. There are a number of them, but we focus on the one that came from, in terms of, we asked them to tell us the issues that they think are critical to be addressed in the access of credit. And we see in Monrovia, we hear high interest on loan acquisition. In fact, this is both for Monrovia and Sino, high interest on loan acquisition by fisherfolk, and then unrealistic loan payment period, and then poor customer service on unstable banking. I think that's something that Gabriel also mentioned in terms of the stability of the banking system. And in Sino, there was the point that the fact that no tailor-made loans or that fisherfolk can assess, particularly in relation to fishing and fish processing materials, the fact that those were not in existence were detrimental to them, and that's something that we should work on. Low knowledge of community folks on financial services and packages was also an issue to be addressed. And the respondents' proposed approach, of course, low interest rates on loans should be made available to them. And then I said at least 2 weeks. So some grace period should be given before people are required to pay loans. With this particular issue, for example, where women who take microloans are expected to pay every 2 weeks or every week. And the idea is that whatever you invested in wouldn't have done much, but then you just need to give it up. And education was also considered important in terms of financial services and packages, and then the creation of special loan portfolios for fishery enterprises. Now, in conclusion, I would just reiterate some of the things that we have already shared, where the type of financing that Fisherfolk need are actually micro loans mainly, and not really huge things. And then credit ranks as the most popular financial instrument among most respondents. And then Fisherfolk have limited access to credit, savings, and insurance, but even though they are not so much onto the insurance thing. But then with the primary obstacle being the issues that they have established, collateral, whatever that is required, as well as the seasonality of cash flows, therefore making it unrealistic for people to just start paying money in the short term after they have taken loans. And then males have greater access to commercial banks, while females have greater access to VSLAs and SUSUs. But then, like I had established earlier on, it looked like males would ask for big loans than will females. Thank you for your attention, and thank you for the opportunity. I know I did rush through, but I hope we got the gist of it. Thank you very much.
Thank you very much, MK. That was very, very insightful. Thank you so much. Please, I don't know if we have any questions from the chat box, but before I invite Isaac in, please, if you have any questions, kindly put your questions in the chat box. Or if you want to mention your questions, kindly raise a hand, and then I will allow you in. So please, I'll be waiting for your questions. We'll be closing at exactly 12:15, so please be patient. We'll just have 20 minutes for Isaac to finish his presentation. So please, do we have Isaac here? Do we have Isaac? Hello, Isaac.
Yes, I'm here.
All right, so Isaac, I think you can start your.
Yes. All right. Can you see my screen now?
So Isaac, please, so we'll be sharing your screen for you. So you can turn your screen off, and then we'll be sharing it for you and be following your presentation. I hope that'll be fine.
That's fine. That's fine. Let's try that also. The problem is it's not about the laptop, or it's simply at the network. So I may be speaking, but for example, I didn't see much of MK's screen because it takes a long time to load here. So it probably, or the same thing will happen even if you share from your end. I might not be following that because it will take a long time to load on my side. The network is just terrible, unfortunately.
So, okay, so what we will do is we'll be following so that the other members can follow what we are sharing based on your presentation. So you can go ahead, we'll just be following you.
Okay.
You may not be able
to
I will, presentation, but
all right, thank you once again. So I'll go straight into, can you hear me? Sorry. Can I go ahead? Can I go ahead?
Disaster. Kindly go ahead, please. Kindly go ahead. You have 20 minutes.
All right.
And then that'll be, yeah. It's taking time to load here too, so
all right.
I think it's showing now.
Exactly. Yeah. All right. Okay. So good morning once again. I'll go straight to the objectives of the project, the Cassava Transformation Project, and just to give a brief background, which I did earlier, so I wouldn't do that. But objective 1, as I mentioned, is to strengthen the efficiency of actors engaged in the cassava value chain to improve access to inputs and market. So here we are looking at the actors working along the cassava value chain from the upstream production all the way through processing, midstream, and to the downstream, which is marketing and even consumption. So we're looking at that. And then second objective then narrows down to the functions that these actors play. So that is objective 2, the next slide. The functions that these actors play. So production, processing, marketing, and all that. We want to enhance all of these, activities. And then objective 3, which is actually linked to our discussion today, is that cassava value chain is enhanced to be financially sustainable and commercially viable. So that is objective 3. The reason why we are having our meeting today. Of course, it's also linked to slightly to objective 4, which is that policies and program and incentives to stimulate the commercialization of the cassava is advocated and implemented. So basically, that will be, a brief of what we've done. I wouldn't go into the milestones that the project has achieved over the time, first of all, because of constraint with time, and also some of them will already be mentioned when we go into the presentation. So I wouldn't do that for now. So what are the existing value chain financing options in the intervention area where we work? It's not so different from the first presenter, Gabriel, and from Mame Chua. It's quite similar, but it's just, just to show when we're talking about different sectors, what are the reflections we can take from there. So generally, when we talk about the intervention area where we're working, agriculture is the main economic, activity here, and then, some level of trading and so forth. So the first one that is quite common is what we call the Susu Club. And this is a rotational, system where money that is gathered from members of a household or a community, members of a community rotate. They are put together and given to one person at a time. So this can be done daily, it can be done monthly, and so from one. It's not often reported. So one person gets the money today, then we put it together for the next person, and so forth. It depends on the group. They decide whether to go daily, to go weekly, or to go monthly. Usually, as I said, it is done among trusted household or community members. And it could be cash, or it could also be food. So it doesn't necessarily have to be cash all the time. It could also be food in some communities. When you look at the system and how it operates, the risk of somebody not getting his share of the money when it gets to his or her turn is low to moderate. The risk increases when the duration is long. So for example, if we are doing a daily susu, rotating daily, the risk is lower. But then if it extends to a month, so one person gets it in January, the next person gets it in February, then the risk of non-payment or default increases with that. And again, it is very informally organized. So the Susu Club is one of the financing options that is very prevalent down here. And then the second financing product or option that's available to members around here is what we call savings made with merchants. So you have these big merchants who may be shop owners, or they sell fuel and so forth. So they are considered as people who are in quote big business and who can afford to hold big money. So with this reputation, people trust that if they have money, they can save with them. Let's not forget in the Southeast, when it comes to infrastructure, even including housing, it can be a bit of a challenge. So if you live in a household where the security of your property is not really assured, like your money, you want to save it with somebody whom you believe can keep your money safe for you. So that is one reason. The second reason, obviously, you don't want to spend that money, but you need somebody you believe when the time to get money will provide this money for you. So this is the sort of the underlying reason behind this particular option. So normally it could be done by an individual or a group of persons can come together, pool their money together and give it to this merchant. And it is not rotational. So once the time is up, you go for your money. The primary objective, as I already mentioned, is to save. And trust is built based on the reputation of the person who is collecting the money. Saving duration normally in this part is either quarterly, biannual, or annual. So for example, if you decide to go quarterly, every 3 months, you go, you already agree a commission with the merchant. So the merchant actually deducts money, charges you for that service that he or she may be providing to you or to your group. And the risk could be low, but it can also be moderate or even high. And sometimes if it's a merchant, for example, in the Southeast, just about 2 weeks ago, one merchant lost most of his goods because the boat that was bringing the goods from Monrovia by canoe capsized. And so he lost most of these goods. When these things happen due to hardship or even force majeure, then the risk increases along with, that kind of arrangement, because he has to take care of himself first and yours can wait. And so if the tenor of that saving is due, he may tell you, I don't have money. And that is a risk to the person saving. Again, as I mentioned, no interest is earned on such arrangement. You rather pay. You can access money, but it's strictly regulated. So, for example, if you agree on a biannual or annual, you cannot simply walk in there and say, oh, I need part of my money. You have to discuss even sometimes some penalties, such, an option. And then the next one is what they call, or what we call here, the Nigerian Susu, apparently, because it was probably first introduced by Nigerians in the country. Again, that is not rotational. It's very similar to, the normal Susu, but in this case, it's not rotational. So there's an agent or a merchant. It could be similar to the saving with a merchant, but here the merchant can go about or can be in his or her shop and collect money from you daily, to save for you. Basically, it's similar, as I said, with the saving with the merchant, but it could be daily, unlike the merchant where you put it together, maybe monthly you go and save. And then the merchant may have an agent who goes around to collect the money for him or her, and no interest again is earned on your savings, and access to funds before maturity can be subject to, just like the previous slide. And again, here, what makes it a bit slightly different is that you could access credit, but it's not common here, but then you pay extra charges on this credit that you are saving. So your savings act as guarantee against the credit that you're taking from this merchant, but of course you pay charges. When it comes to risk, it is moderate to high, because especially when an agent is involved. So I may be a merchant, I send an agent there, he collects money, and he decides to abscond. That is a huge risk that some savers can be confronted with. Then the next one is the savings club, which is very common in the Southeast. So the savings club is slightly similar to the village savings and loan, only that in this instance, it is, you would say, only about 20% of the activities around this savings club is for. So there are not too many bookkeeping system around it. So it's a membership base and it's not rotational. What happens is that we are all members. We decide we meet every week to put in money. You can decide how much your strength can afford you to put into the bowl. And then every member is supposed to take a loan, because that is the only way they can, the group can generate profit or by way of interest on the loan. So you are forced to take a loan 3 times. So there's a compulsory loan for members, and the interest rate is very high. So it is 20% on the loan per month. But if you are not a member, this is what makes it more interesting. So of course they want to give out loans so that they can get interest and share the profit. So if you are not a member, you are still allowed to go there and take a loan, but you need to be guaranteed a member who knows you, who can say that, you know, I'm guaranteeing that in the event of default, then part of my money can take care of that. And there the interest increases. And this interest is very similar to what private loan providers are doing here. They call it the 125. So you take $100, you pay $25 per month as interest. So it is similar to that. So in this case, it's the group that is acting as the loan provider at that 25%. And then the interest generated from your first compulsory loan that you take as a member, and the second is shared equally among members. So that is the profit. But the third one that you take will be reimbursed back to you. So it's basically no interest on your third loan. It's reimbursed back to you. Another interesting fact about this savings club is that there's no alignment between how much you save and how much you can take as a loan. So you could be saving, somebody may be saving 500 LD per week, you'll be saving 100 LD per week, but you could both same amount of loan irrespective of how much. I think the focus here is more of what they generate from your loan interest. And again, the loan interest, the interest is already taken up front. So you 1,000 and the interest is 200, they give you 800. So you already pay the interest. So that's the key focus of this kind of system. I wouldn't waste much time about the financial institution, former financial institution, because I think a lot has been said by the previous presenters, only to say that in the Southeast, we have 4 commercial banks and 3 rural community financial institutions. In Sino, we have the SIB, IB, and EcoBank in Maryland, both in Plebo because it's sort of the commercial center of the county, and LBDI in Zedru in Granchide. Well, common characteristics among all these is that they provide 3 key, financial services, that is savings, loans, and transfer services. And then we have some providing online services as well, but none has a product for agribusiness except SIB that does something around Susu. We are also talking to them to see how we can link the VSLAs to this kind of product, but we haven't gone. They just started anyway, so the discussion also is following through. And then one characteristics of this financial institution is that it's characterized by this periodic long queues. So getting to the end of the month, you will see long queues at the bank, and this is also coupled with there's no cash or services down and so forth. And again, when you talk to our beneficiaries or the actors we work with, most of them are put off by the charges on their products on their facility. So, for example, they will tell you that, oh, we put money there. Every time you go, the money has reduced. If you don't take it, by the time you get there in a year, your money is finished. So there's no point in putting your money there because the service charges really reflects on this a lot. SIB, for example, which is in Greenville, is not linked to any mobile money service. So you either have to, you can only transact between SIB, and none other financial institution. And then we have the village saving and loan, which we really leverage on as a project. And just to give a brief overview of it, it's also membership based like the club. The main objective is savings, loan, and interest generated as profit for members. And the funds are kept in a metal safe, as you can see in the picture there, where we have 3 key keepers and 1 box keeper. They are not supposed to be relatives. They are not supposed to live together. So there's some form of security in there. And then there's the tenor, usually biannual or annual. Most of the groups we have here are annual, savings club. And there's a protocol for its establishment. There needs to be some sensitization done, some trainings done before the establishment itself. And then you need to elect leaders and so forth to really govern the association. Interest is usually lower than the savings club, like we saw on the previous slide. And then they have what they call the social fund. So the social fund is some part of savings made by members, which is tailored for welfare purposes. So somebody loses a family member or is bereaved or has a child and so forth, to support that member, or even for productive purposes, as we have seen with some of our groups that we're working with. Again, moderately formalized. So there are bookkeeping systems. Each member has a passbook, and information entered in the passbook has to be replicated in the general ledger and so forth. So it's quite formalized in that sense. So the question is, knowing what pertains within our county, what have we as a project been doing when it comes to cassava value chain financing? And so that will start with having a look at the, so the next slide, you see the work distribution. So we have to look at it also from a gender perspective. You will notice when we get to the maybe next two slides that the value, the VSLA, the Village Savings and Loan, is normally characterized by a lot of women as members. And that truly reflects also the value chain itself. So if you look at the value chain, the blue on top, male, and then the orange color is the female. You see that apart from site selection and land preparation activities, most of the activities along the value chain are mainly carried out by women. So this is very important if this will work as a tool, that is the VSLA will work as a tool, and the money generated from the VSLA can be geared towards these activities. Then you will need to look at it from the gender perspective. And this reflects, how it is being done here. Then the next slide, you will see that when we talk of the cassava value chain, a lot of the time is consumed around cultivation of cassava, and then just a very little amount of time is a link to post-harvest and marketing activities. So you spend about 6 to 12 months to cultivate cassava. You spend less than a month, just about less than a month to do all the other activities post-harvest. But what are the labor, what are the financial requirements along these two tracks of activity? When we look at the cultivation aspect, you will notice that labor financing, input financing, and asset financing are the main financing needs of the actors along this segment of the value chain. When it comes to labor financing, it is mainly to prepare the land, to plant, and also at some point to harvest. So labor financing is key. But what we've seen here is that it doesn't really, so the color, the shade of the color tells you what really goes into the amount of cash out or cash spent on labor financing. It's very low around here because they have what they call the pool system, where they pull together their own labor resource to help each other to do this activity. So very little in terms of money financing goes in. At best, you spend money on preparing food for the members of the pool system to finance this. When it comes to input financing, it's really to finance the cassava cutting, the planting material. Here, not much is spent on agro crop protection products and fertilizers. Not much is spent here. Then asset financing also is very low, mainly on getting the tools like machete and hoes for production purposes. And then once you are moving out of cultivation and you are harvesting, the net is that it's likely that you make some savings, but it's not much because selling raw cassava really doesn't earn you much in the Southeast where we are working, because everybody essentially plants cassava in their backyard or on their farm or garden. And so you don't earn much in terms of saving. But then post-harvest activities is what really earn you much. But the cost of carrying out post-harvest is very high, as you can see with the color shade. And asset financing, you need to acquire a center or a place to do your production. You need equipment, be the greater, and then also the operational cost is quite high because you need to consider transportation, purchase of even sometimes additional raw material, like if you're doing the supermarket, you need milk, sugar, and so forth. So post-harvest financing is also one of the key highlight there. So as a project, we leverage on what is already there and build on it. So the cool systems, we try to then strengthen it to become farmer groups or cooperatives. As we speak, when we came in, we had a cooperative, one that was had been registered in the past but was no longer functioning as the license was all expired. Now we have 8 functioning farmer cooperative with a total membership exceeding 1,000. So these ones we have, that is where we build the VSLAs from. So if you have a membership of 90, you could have 2 or 3 VSLAs within this cooperative. So labor financing, we know it's something that is an opportunity that they are already utilizing. So we build on those ones by further strengthening these groups. And then when it comes to input financing, one of the things, there was no access to improved planting material at the time that the project came in. So in order to do that, we've been working together with the Ministry of Agri and also the Central Agricultural Research Institute to introduce improved varieties. And now they have also set up closer to them. So the cost of getting, and transfer the materials have greatly been shortened. So that is some of the things that we're doing there. And then when it comes to asset financing, again, we are piloting the main thrust or the objective of this is to, as much as possible, reduce the cost of production or the cost of carrying out all the activities along the value chain so that you can maximize your profit. So of course, if the cost of labor to harvest is high, then it will invariably affect your profits in the end. So once you are able to put in measures that reduces this, then obviously that will affect your profit in the end. So we're introducing something like the mechanical weeding machines, and we are collecting data to see how effective technically and also financially will it reduce the cost of weeding for the farmer, because you can't 100% rely on the system as a means of meeting your neighbor needs on your farm. Don't forget, most of the members also have their own farms that they have to attend to. So we are piloting this. The harvester, we have done that. And when it comes to even further downstream of the value chain, we are financing direct. We are doing direct financing in some instances. We are a project also, so we know that you cannot come in and do the market approach only, but sometimes you need to have a mix of the market approach with direct approach, financing approach. So we have put up about 6 processing centers across the project intervention area. But at the time we came in, there was only 1, and now the number has now increased to 7. If you add the private entities we have supported, then it comes to 8 in total. But then we have also realized that we cannot focus more on finance, because then who doesn't want a free processing center? Who doesn't want equipment and so forth? So we need to also reflect on this and see, are there other, you could call it semi-direct financing approach, and we'll come to an example that we are also doing there. So yes, we provide equipment, we provide asset centers and all that also for some of these beneficiaries. But then, as I said, there's always a need to bundle financing with non-financial services. That is the only way you can create sustainability, and also to win them off the need to always come for the direct financing. So yes, we do provide direct financing. We do also support them in establishing village savings and loan, but we bundle it. So if you look at the village savings and loan, for example, now we have 29, we 2 more added, so we have 29. By the time that I'm reporting, 24 had already completed their savings cycle, and 728 members of this groups have benefited one way or the other. They had raised a total of $82,000 over the last 12 months with a profit of $24,000. That is 1/4 or 25% of what they raised comes back to them as profit. And that reflects also, the fact that they've all started doing the second round of saving, because most of them were members of SUSU clubs or savings clubs. And as I mentioned, with the characteristics of these savings clubs and so forth, this is more attractive to them because, first of all, the security is higher, the interest earned is lower, so you can take loan also you can be sure that, because of the number of times that they are meeting, you are forced to get something to put in there. So build, that character of saving in itself. So that has its advantages. But as I mentioned on the next slide, you see that we do the bundling of services. So, for example, a group in Sino County here, the Panama Women, they are a membership of 96. So we have subdivided, or we supported them to subdivide the groups into 3 to manage them. And each of these groups is responsible for economic activities on their own as a group. So they carry out farm production, they carry out processing and marketing, and then also they have village savings and loans. With this, you will see that this 30 members actually comprise 28 human members and 2, I would say, non-human members. It is actually the productive activities that they carry out that earn their money is characterized as a member. So they also hold a card. The reason is that, for example, if every week we have to put in, you have to save 500 LD, the productive activity will normally have more money to put in than maybe a single member. So you create 2 members so that they can take the 1,000 instead of the 500 LD. So the 30 members comprise 28 human members, 2 non-human members, that is generated from the productive activities that they all carry. If I'm a member of this group and I decide not to take part in the productive activity, that is no problem. It will be saved. You can go for loan. The center or the service arm can also take money to carry out the productive activity. At the end of the savings cycle, we share the money according to your share and your savings generated. And then these 2 non-human members will get their money as if they are human. This is the money that will be shared amongst those who took part in the productive activity. Those who take part in the productive activity will earn more than just being a member of the VSLA. And this also encourages the sustainability of, continuously engaging in productive activities. So the center that will be there, you can be sure that it's going to continuously be in production, because you earn more if you're in production than if you are not. And then we couple that with the bundling of non-financial services like gaps training, processing and QMS training, cooperative strengthening, and then business development services like bookkeeping, financial literacy, and so forth. So that in itself will also create, a stronger cooperative and a more assertive and a more productive cooperative that will make things like, should we buy a second grater because our farm is expanding? Should we invest in a tricycle, or we should rather invest in packaging? Because now they have the technical know-how to make these decisions. That in itself then helps the project to know that on its exit, you have created the conditions for the group to sustain itself beyond that. So the example that will come out of it is the Willey example that we normally give, because this is a group just with the VSLA, they were able to generate their own money from the welfare, the social welfare fund. And instead of using it for welfare purposes, they decided to use it for productive purposes, because they realized that if they could earn more from their productive activities, they will be able to save more. And so we came in and then we supported them. So it was a cost share. So they came to us, can you help us facilitate the construction of a center so that we can increase our production and so forth. So that is what I was referring to as moving away from the direct, building everything for and equipping to sharing cost. And this is spreading across a lot of these, groups around, especially in Maryland, when they heard, oh, this is how willingly managed to get their center, and now they are in production and all that. They keep coming, and then they are more encouraged to even go and start building themselves, and it's all over the place now. So the next slide will beg the question. There's always this perception that when we talk of financing, we are talking about loan, we are talking about people not getting access to finance to do their production and all that. From our experience as a project here, we ask ourselves, these 3 financial services that usually are provided by many of these institutions, that is loan, savings and transfers. Which one is more important, or do the actors consider most important, and which one reflects the kind of engagement that they have when it comes to financial services? And we will say that it's saving. In fact, some of our groups are paying, or some of the actors we are working with are paying to save. They pay merchants to save their money with the merchants, and they pay high. So, for example, if you save for 12 months, I think 1 month is for the merchant who saved for you 10% of it or so. So they are paying to save. And so the perception out there that when we talk of financial services, it's only about loans. It is not really the case. I would say, at least from what we have experienced around here. Don't forget, 728 of our beneficiaries within a year raised $82,000, and that is because we put a cap on or they themselves have put a cap on the number of the amount you can save per week. So imagine if they increase the cap on what you can save per week. It could double. So it means there's money there, but it is not really pooled such that it can be used for productive purposes when it is. So that perception there that when we talk of financing, it's only about loans and maybe transfer. Transfer, yes, it's one of the main problems. For example, one group that we're working with in Grand Cru, they have their they save with the rural institution in Barclayville. So we have the local subsidy contract where we subsidize some activity for them to register as cooperative. And once they prove that, we send the money to their rural bank. But then they complain that by the time we go to Barclayville to take that money, we will use it on transportation. So they prefer, they have it because the condition of having a cooperative is to open an account. But then what is the essence if you have to spend as much just to take that money from the bank? So these are some of the challenges that some of these actors are confronted with. Then there are the issue of transfers. Digital financing is one of the means of transfers here, because to transfer money from one end to the other here is almost impossible. So are there thoughts for digital financing? We can be looking at that. And then more and more, there's a new shift in there's a paradigm shift from agri financing to sustainable agricultural financing. So now, instead of looking only at the economic aspect of financing, we are bundling it with the social considerations. We are bundling it with the environmental consideration, coupled already with the economic considerations. So are there modules that we can also learn from? I like the presentation from the first and then the second, but maybe we should also spare a thought for sustainable agricultural financing because even the first presenter said almost 90% of our agricultural financing needs are met by donor funds, and the donor is going green. But are we going green, or we are not ready yet? So these are the things that we need to also think about. I'll end it here. If there are any questions, I'll be happy to answer. Thank you very much.
Thank you very much, Isaac, for that insightful, packed, and very detailed presentation. So within in a space of 1 minute, we want to take your questions. If you have any question, kindly raise a hand, or you can put your question in the chat box. Okay, so I have a question here from Albert. For agriculture to be viable in Liberia, we must take keen interest in the climatic, that's the agro-meteorological condition. Is it possible to tie farms to acquiring paid-for weather information? I think that question will go to Isaac.
Sorry, please, if you can ask the question, if the line dropped for a moment, I didn't get it.
All right, sure. So the question from Albert is, for agriculture to be viable in Liberia, we must take keen interest in climatic, that's the agro-meteorological conditions. Is it possible to tie farms to acquire paid for weather information? That's our first question.
Thank you. And that goes to the bundling that I talked about, because there then you are talking about agricultural insurance. And I think even the basics have not been tackled as yet. And the basics, I mean, even today, we suffered internet blackout most of the time today. The infrastructure to really go into agri insurance, of course, it's possible, but it needs to be done organically. You know, you can pilot it where it will probably work. And then you need to also consider the value chain, because if it's not high value crop, insurance may be possible, but it may be expensive. And so, yes, data is important. You need weather index-based, you know, to inform on some of produce some of these tools or products. And then with the data has to be with the deployment of this data, because not just collecting the data, but also advising farmers on or as a warning system on what to do in the event or even before the event happens is also important, and that comes with the infrastructure. It could be IT infrastructure and all that. So I'll just leave it there, but it's possible, but it needs to be taken in small pieces as in Liberia context. Yes, thank you.
Thank you very much. I think there are no further questions. So, and also for want of time, we just want to wrap up. So we'll send emails on the next steps. Thank you very much for your time. Thank you for participating. Thank you for all those, who have been with us from the beginning up to now. Thank you so much. Thank you also for to our presenters. You did a very good job. God bless you all. And before we wrap up, we want to call on Gladys. Is Gladys online, please? So Gladys, just take a minute and say a word of prayer for us to wrap up.
Hello, are you getting me?
Yes, Gladys, go ahead.
Let us pray. Our Heavenly Father, King of Glory, we thank you, God, for such a great meeting and deliberations. We pray as we go back to our various works and duties. We pray, Lord, that you yourself will give us the strength and the wisdom to be able to implement whatever we have learned to the benefit of Liberia and the world at large. We thank you, we bless you in Jesus' mighty name. Amen.
Amen. Thank you, our donors, for participating. Thank you, our government officials, for participating as well. And thank you, everybody, for your participation. Until then, be well and have a wonderful rest of the week. Bye.
Bye-bye.